Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Erik Asgeirsson, one of your hosts for today. You can see we're coming live from our New York studio, and I'm with Barry Melancon. Barry, it's great to be with you again.
Great to be with you, Erik. 2 in a row that we've got. And, always, we'll talk about this in a little bit, but always breaking news when I'm around. So there's some stuff happening in Washington.
A lot of break. It's August 1st, Barry. Last week, that was a great town hall. We had over 10,000 live attendees. So Westbreaker, a lot of great insights. And we got a number of, we're going to kick this program off with René Lacerte, who most of you know, and those who don't know, look forward to introducing you to René. So why don't we bring René Lacerte up? René, it's great to see you. René is the CEO and founder of Bill. I'm going to cover a little bit about René's history in a moment, but welcome, René. It's great to have you with us.
Well, thank you so much, Erik. It's always good to see you and to see Barry, the dynamic duo in front of me. That's what I'm excited about today.
Well, thanks, René.
I won't say which one's Batman and which one's Robin. I'll let you guys figure that one out.
Right. Well, René, thank you very much. And Lisa Simpson, we have four presenters today. Lisa Simpson will be joining us shortly. What we're going to kick off with René is a discussion on financial automation in tools that are critical to the client advisory services practice. But just a little bit more about René. I mean, when I talk a lot, I say that technology is transforming the practice of finance and accounting. And René Lacerte is someone who has put a lot of tools in place to help firms transform finance and accounting. He originally founded PayCycle. PayCycle is one of the first cloud payroll platforms. And that is the backbone of Intuit's payroll platform today. He also founded Bill, and Bill.com, it was originally called Bill.com, is now leveraged by 8,000 firms. And one thing that René has done for his whole career, and he's started at an accountant, Big Four firm, is building his tools in a way that enable firms to better support their clients. So Barry, you and I have both known René for 15 years. Maybe a couple of comments just on his impact before we get into the discussion.
Well, he has a long history of that in the support of the profession and has a business and entrepreneurial mindset that has supported that, which we appreciate, René. But I can remember the first conversations we had with René, that I had with René, was about being a long-term commitment to the profession, being a key component. That's something that we really believe in our relationships, and really we want to do things to help and enable the profession, not to hurt in any way or disintermediate the profession, is the old term that used to be floating around back then. And René, you've certainly lived that, so we're very much appreciative of that relationship. And 8,000 firms using Bill is a fantastic number.
I appreciate all of that, and I think the thing that comes to mind for me are my two grandmothers. They were both accountants, and all the businesses my parents had were financial automation back in the 60s using, back then mainframes and mini computers. And I just really believe in what accountants do for our country. And I just want to make sure that they're successful.
Well, thanks, René. And I know you put a lot of posts about that on your LinkedIn section. So before Bill just released a State of Financial Automation report, which we're going to be discussing. But before we move to that, I think it's just important to kind of, baseline or foundational set for the town hall community a little bit about client advisory services, CAS. There's many names for his virtual CFO, BPO services. But this category has evolved over the past 15 years due to these capabilities: cloud bill payment, cloud accounting, cloud payroll. It's allowed firms to provide these services to their small business clients. We had Dan Hood on earlier this year, and Dan Hood, talked about how in his top 100 report, he has never seen a category more clearly called out than CAS related to the growth opportunity. So it's clearly a critical area of the practice now. And when you look at this slide here, it starts with this financial cast, supporting the monthly close, financial metrics, AP, AR collections, expense management. And then as you move from financial cast to what we're calling business insights cast, it gets into that advisory category. And we're in baseball season, Barry. And we're not going to talk about the Yankees or anyone like that, but I like to say that we're still in the early innings of this movement. So there's still a lot more to be done. So maybe a comment from you, then we're going to really get into this report with René.
Well, if you look at this chart, if you look at that upper right-hand side where it says Trusted Advisor Business Insights, which you were just alluding to, and I know René is going to weigh in on this, but technology has continued to evolve over the decades, much more rapidly in the last few years than earlier decades. But that notion of what we are as a profession is about those business insights, that trusted advisor role. And I would just put out there that businesses of all size, but particularly small businesses in today's world where technology is going, the unsettled nature of the economy, all of those things, the role of the CPA who can take all of that stuff that's happening on the left-hand side of this cast slide and really give the trusted advisor help to the entrepreneur to help them, be successful and to deliver on their passions is really the most important thing. And it will continue to be even more important as technology continues to speed up.
Well, René, why don't you comment? You've built some of the core elements here, the bill payment platforms, payroll platforms, but you're also thinking about, insights, cash flow management. So, and I know you talk to firms all the time about their cast practice.
Well, I think before jumping to the firm conversations, we have known each other 15 years. And in those early conversations about figuring out how to partner, it was we both, meaning Erik and Barry and myself, so I guess the three of us had a shared vision that the opportunity that technology was providing accountants was actually to create a much stronger relationship with their clients, where they could be a strategic advisor, the trusted advisor that you have on the right. And that is because of the types of insights that you're able to get. But to get there, we have to get rid of all the mundane tasks that happen every day. That's what was bogging down accountants. You think about this when we would talk to early firms, they would have shoe boxes of receipts and invoices that were missing that they were trying to reconcile for the monthly close and the books. And we can solve all of that because all the bills go through our platform and enables the accountant to be far more strategic. And so I think the evolution and what I'm excited about is that we've stayed true to our mission and commitment to supporting accountants and to really helping move them into the right-hand side, which is to be that trusted advisor. And as we think about technology's movement, which is going to keep coming, that's what happens with technology. It just keeps coming at you. We're going to continue to create more and more automation. And so it's going to become more and more critical for firms to actually be that trusted advisor to really enhance that relationship. We've also seen, and we could talk about this for a long time, that the firms that actually adopt that trusted advisor, their ability to drive revenue and growth inside their firm grows dramatically. So I think there's just lots of opportunity here that comes from this movement from the mundane tasks being automated. That's what technology is good at, but really giving the tools then for the insights, which you asked about, Erik, that accounts can then provide. So we'll create more technology to make it easier for accounts to get those insights, but ultimately it's going to be the accountant and the firm that's going to be the strategic advisor to the clients, I believe.
And I would just add to it that one key component in a world of human capital challenges that people entering the profession are going to have to move up that process quicker than ever before. And we talk about that in the context of competencies, but how do they get that business acumen competency to really be that valued relationship with the client, which will make the firm more successful as well.
Yeah, well said. And one thing that, René, we've really learned is that the small businesses want the accountants to run the machines, the technology platforms that do these mundane tasks for them because they can do it better. And they then want them to deliver the insights. So
absolutely. I mean, just one quick point there is I haven't met one SMB that ever says they want to do the finances. I was one, and that's why I started this company, because I like finances. But no accounting firm will ever meet a client that says they want to do the finances. they want to understand their finances, but they don't want to do them. And that's the difference here.
Right. So, and we always provide the town hall community resources. So I'm showing here a 50-page plus state of financial automation surveying report that Bill just put out, and they did this with the small business SMB group, and that's what that acronym stands for. Small and medium-sized businesses, and really, Renee, you're all about small businesses. I mean, this report was focused on businesses with like 10 employees, I think up to maybe a couple hundred. Yeah. So that's the sweet spot here. And Barry, you talk about digital transformation a lot, and this report to me really highlights how small businesses are thinking about digital transformation. And you look at this slide here, and they clearly get the importance of automating their financial operations, Renee.
I think it's something that as consumers' lives become more and more automated, they are going to expect that in the business life. Now, unfortunately, business life is a lot more complicated. There's a lot more transactions. There's a much stronger need for reconciliation. There's obviously a much stronger need for accounting, so you understand where you're spending. All of that is much different for businesses. And so technology has to do a lot more work. And that's where businesses are reaching out and saying, you know what, we kind of expect this ought to be automated, and we just need the right tools to be able to make that happen. It's not just recording the transaction after the fact. It's actually automating that entire process that leads up to the transaction. And that's exciting for me to see that 90% want to have it all automated.
Yeah, but equally, that last question there, that where 67% still of the entrepreneurs still say, well, maybe my company is too small to benefit. I think that's a huge data point for CPA firms, particularly smaller CPA firms, because that educational component back to the entrepreneur, that relationship that exists, really gives them the opportunity to reset that discussion and create different kind of value with their clients.
Yeah, because Barry, one thing, the cloud has kind of leveled the playing field for businesses of all sizes. I mean, you can be a very small business, put all your data in the cloud, work with an accountant, and get the advantages of a large business. So this next slide here kind of goes into something that is just critical to the success of a small business, and that's cash flow, and they really look to their accountants to kind of help them with that type of planning. So lots of different elements, Renee, that your report kind of highlighted related to cash flow management.
Yeah, and I think all of it just boils down to there's a lot of process that happens in a business. It's not just about recording a transaction in the GL and then creating a report out of it. There's a lot of stuff that happens, whether it's sending or receiving, reconciliation, and all of these connection points with your suppliers, with your customers. That's what we're all about automating and really trying to solve that pain point. And I think that's what businesses need, because that's what's holding them back. And to your point, Barry, on the last slide, when I started, Bill, there were a lot of accounting firms that I talked to be like, I'm too small. And because of the relationships I had, I would ask them to check it out. And then 90 days later, they'd be like, I had no idea my life was so complicated before, because we simplified it. And I think that's the thing that we have to do as a profession, if you will, is to help educate people that you're not too small to have automation and efficiency. Every business needs it, especially in these times.
And it's actually, Renee, when we first started working on, automating bill payment, it was more about, moving from paper checks to electronic payments. But digital transformation, you could call it 2.0, 3.0. There's so many more advanced elements to it. And that's what I would encourage the firms to think about. Or if, we have CFOs and finance leaders here on the town hall, but thinking about, the more sophisticated ways to automate your platforms. I mean, it's workflow related. It's in many different payment option capabilities, not just, you're not just going to think about ACHs. We're going to, in a moment, talk about, virtual card payments, Renee. So I think, how have you seen this evolve over the past 20 years?
Yeah, I think if you just think about the basic essence of what we talk about at Build are the bill payments that are coming and going. But if you think about money, it's a very, very critical factor in any business, but people can be very emotional about it. And it's because of all the complexity around the things that happen around money. So I would say for payments to be effective and valuable, there's kind of four cornerstones. They have to be easy to make. They have to have simple reconciliation. They have to move quickly, and you need good funds. And so if you were just to think about, like, go back 20 years ago or 10 years ago when everybody was using checks for businesses, you would say, well, checks were good for reconciliation because you got it back and you had a chance to be able to see that it was endorsed and you could file that away. They weren't so great on speed. And, it was kind of iffy on good funds. They were pretty easy. Everybody thought they knew how to do a check. And then that wasn't true for ACH, right? There was no easy way for the ACH to happen. The reconciliation was okay, but actually sometimes it was cryptic because you just had a dollar amount. Was it good on speed? Absolutely. And so what's happened is we've taken all of those complexities around that and really tried to help businesses and accountants be able to have all of that in one place. And so that's really the simplicity that's necessary around the workflow that you're talking about. It's all those things that's what matters with the payment. The payment is the last inch of the mile. It's everything that goes up to that payment that needs to be automated. And that's what technology is enabling right now, is for firms to be able to take advantage of platforms that actually automate all those processes behind the transaction.
It's interesting. We're talking about this rightfully in the case of small firms, and you mentioned CFOs and others that are on this town hall as well. We do a lot of work, obviously, on the corporate side, where we have almost 50% of our members that are in that area. And the transformation aspect, all in very much the same way that René just talked about it for small business, has also and is happening in the large business environment. And what they're saying, this transformation that's occurring in the large business environment today is, and we want to free up our people, our talented, smart people, to be able to give us more value and to partner with different parts of the business. And these are the internal functions. And that comes across in every size spectrum of the business. And what René just described from a process point frees that up on the corporate side. So whether you're looking at it in a client environment or the corporate side, the mission is still the same.
Absolutely.
Well, let's move to, it's always evolving. So, there's always new capabilities coming out, and what that offers is new things that the firms can provide to their clients and more value to their clients. And I'm very excited about what, these smart cards, these new, modern business cards represent for, and deliver for both the small business as well as the accounting firms. So René, I'll let you kind of describe this a little bit, the spend and expense management category, which Bill, you're enabling you're providing one of these smart cards, your Divvy payment platform process.
Yeah, no, what's fun about being in technology is that it changes all the time. There's more and more capabilities. I probably left off one element of the cornerstones of a payment, and one of them is control. I think all of us know, and actually one of the reasons I used to like writing checks is because only when I signed it would a payment actually happen. Like there was a control mechanism there. And so when you think about virtual cards, that's the thing that it brings to the card platforms. It gives you control that you didn't have before. So if you just think about how you use plastic today, whether as a consumer, as a business, or the firm, you use it for convenience. You're out someplace, you don't want to have to write a check. That's great. Well, there's less control. You can't say to any one employee, you know what, I'm going to give, Barry this card for this, and I'm going to give Erik this card for this, and I'm going to give René this card for that. And any of those employees that you're using, they need to be able to change their spend on the fly. It could be that, you're at a digital CPA conference and you're having, a really important get together with some new partners, and you decide to take somebody out to dinner and you want to increase the card that they have, right? So what I'm trying to say with the virtual card is that you think about the card and the flexibility that you can use it anywhere. And now you layer in the technology where you have the ability to control that card at any point in time. You can stop it midstream. You can change the value, the amount that somebody can use on that card. And that's what enables this to be a very powerful tool for businesses and firms. So an example of how this could happen every day is if you think about the recurring bills a business might have. Let's say it's their internet, let's say it's their cell phone, let's say it's their utilities. They're probably always within a certain size, right? And what you can do with a virtual card is you can actually have those payments automatically made up to a certain limit, and you've never given out your bank account. You don't have to worry about anybody stealing your card, and those payments happen on time every time. And if it goes over the amount, it won't go processed. So you'll have a chance to actually review that transaction. So there's just lots of opportunities to create more experiences for businesses and for firms to actually create less effort to be able to transact. And so, it is what you think of. It's a virtual card, which is a credit card. It's cheaper than an ACH. It's cheaper than checks. It's actually free for the business. There's an opportunity to get cash back on rewards from most card programs. Reconciliation is automatic, and it's faster. It can be a same-day payment, and so all of that matters when you're in business. You want all those things to happen, and I think virtual cards are going to be an important part of how all of us manage and control our spend going forward.
Yeah, Renee, I'm hearing this is a nascent, early stage category, but a lot of firms have put this in place. They actually say this is something that their clients value even more than just the automating of bill payments. These virtual cards, the control factors that they can put in place, the elimination of expense reporting. It is a mind shift, Barry, when you think about spend. Everyone's always done expense reports, but that's after the fact. To do this in a proactive spend management up front, and then having an outsourced firm just kind of quickly review everything to make sure it's in line with policy. Or when I talk to CFOs, they got a couple 100-person business. Their teams aren't wasting time filling out expense reports anymore. The controller's taking a look to make sure everything's in line with their spend guidelines, and you've got all the data.
Yeah, and I think it's important to not just think about controls as it relates to, expense reports. That would be sort of the travel and entertainment type of expenses. You can look at a company, even a small company, where people have different functions, and you can authorize these virtual cards so that person A's spend can only be in a certain area, and person B can be in some other area because of all of the codification process that's there. So from a control perspective, you actually move it up front. And I think Renee said this. You actually move it up front rather than after the fact when you catch something that might be wrong. Again, that ends up saving the client if you're in a public accounting firm, your company if you're on the finance side.
Yeah, and all of that is what's exciting to me is also the advancement of technology and how AI is going to help all of this. It's going to continue, like the policy example you gave, Eric. We are, incorporating policy detection and automatic, flagging that for our customers today. That's pretty cool, right? And that's the opportunity that we'll continue to learn and help the firms identify and be more strategic with their engagement and their clients.
Yeah, just lots of opportunity. So we're gonna step out in a moment and ask Renee some broader questions about what he's seeing with small businesses. But this is just kind of a summary slide of what we've been talking about. You get some primary research on what's happening with small businesses related to their financial automation. So digital transformation is underway. Big businesses always talk about it, but digital transformation is an absolute topic for the firms to be having with their clients. Management optimization of cash flow, lots of opportunities there. Lots of opportunities on payment flexibility. It's like there's so many different payment options, and having a unified payment platform available for your clients, I think, is a differentiator for the firms. And then we're putting together resources, and it's really a lot of the practice strategies that deliver success when you're leveraging these different types of platforms.
And I like to think about it in the very practical sense, and this is going to be a public accounting statement, but the reality is we got 44,000 firms. The vast majority of them are small. The vast majority of them are working with small businesses. Those small businesses, to the extent they have a finance staff, so let's say they have a controller or even a CFO or whatever, they're really generally limited, and they're sort of on an island. They're not getting exposure to a lot of these other types of things. And this is the huge, I think, opportunity in this sort of transformation world for the firm to really be that voice to that entrepreneur and put the transformation of the finance function pretty high on the priority list because of the control and the savings that can be obtained for the client. The entrepreneur is focused on making the widgets or selling the widgets, or if it's a service, delivering the widgets, generally not focused on the finance function. That's not what they're waking up to do. And yet we have hundreds and hundreds of thousands of businesses where that finance function, the person doing it, really isn't exposed to the types of things that are happening in the marketplace that can actually affect the profitability of the entrepreneur. The firms can deliver that message.
Yeah, I think, these 4 trends are just, they're vital, I think, to understand. And ultimately, the word that comes to mind is it's really a transformation of accounting. And this is what I think, Barry, you and I talked about the first time that we met, was kind of the vision that you had. Erik, I know it's what we've talked about pretty much every time we get together. The accounting is going to transform because of technology. That's true for every profession, but the opportunity to actually really level up your services and provide a strategic insight, it's going to get easier and easier to do that, and you'll be able to be differentiated more because of these trends. Businesses are going to adopt that trend I talked about on the consumer side, where you have consumer trends. People expect that in the business world. That's going to continue to happen. There's going to be more evolution. There's going to be more technology applied, whether we talk about AI or not. That's all going to be part of this. And that's going to lead to people wanting to be more strategic. And that's the management of cash flow. We see that more and more from our customers, that's the thing they want the most right now. So these are all trends. They're super important and super exciting when I think about what it means for accountants across the board.
Well, René, just a great discussion. This is a town hall. We got a lot of topics that we need to cover. We could go on with you for the full hour, but we're going to move to a couple of other segments now. But it just thank you for what you're doing, for your 7,000, 8,000 firms plus, and just how you think every day about, putting more tools in place for the firms and for, business and industry to make them more successful.
Well, happy to join you guys anytime. It's always a great conversation.
Thank you for being committed to this profession also. Thank you very much.
Thank you. Thank you.
Okay, Barry, that was great. So here's just a couple of the firm resources. For those of you that just want some more foundational information about client advisory services, we've got blogs, we've got white papers. We actually have a monthly CAS Insights newsletter, which kind of, brings, the latest and kind of reinforces some of the key best practices that firms are putting in place to drive success. We also have more information about the spend and expense management category. It's in the early stages, but a lot of firms are building success. We just actually launched a spend and expense management workshop, which is helping firms build out this category. So resources there. So Barry, let's jump in to I know you say there is breaking news today. So there's some not related to the presidential election, and we can comment on that. But maybe you just want to kind of go right to the breaking news.
Well, we've been talking about the Wyden-Smith tax bill that has passed the House months ago and its prospects. And we've been talking about the prospects of it passing the Senate. And we've put it at very low percentage throughout this process. And then, of course, we could talk about it from a lame duck perspective. But just literally a few minutes before we came on the air in this town hall, the Senate took what you would call as a procedural vote, a cloture vote in technical terms, on whether or not to end debate, technically, which would force this bill to an up or down vote on the Senate floor. That would take 60 votes in the Senate. That's the process. The vote was 48 to 44. There's some senators that are not there. And it was bipartisan on both sides. There were 2 Republicans that voted in the 48 and 2 Democrats that voted in the 44. But it's not 60, so it doesn't bring it to the floor. So what is if you go to the next slide, let's just remind everybody what's in this bill. So the most important things that we've been talking about is 179 expensing, the R&E, accelerated expensing type of notion, and then of course a pay for related to the end of the ERC changes, which was tabbed at January 31st, 2024, which the value of cutting that off was to pay for some of these things. The other big issue there was the child credit. And that was politically why that was brought up the way it was. The Democratic leadership wanted people on record as to whether they were supporting a bill that was going to enhance the child credit. Obviously, we're in a political system that's going to be part of the debate. But they forced that vote, and it essentially it take a miracle for this bill to move forward in the Senate, certainly before the election. It would be virtually impossible for it to happen, both from a time perspective and just because of the outcome of that procedural vote. So,
Barry, we do have this is a slide we showed last week. We thought it made sense to show again this week.
Right. So this is just sort of our strategic analysis on all of our issues. We have this on all of the issues. This is just the one on the tax side of things, depending on how the November races come out. Now, this is not a political chart in any way. It looks at all the possibilities. It's a chart that looks at all of the possibilities. You know, a clean sweep by the Democrats, a clean sweep by the Republicans, or split government in the middle. And what is more or less likely to happen given the politics of that particular point. If you look all the way at the bottom, we had the before year end, a 2024 tax bill, which would have been the Wyden-Smith bill that I just talked about. And so that obviously is very unlikely now, no matter what happens. There's still the notion that this could be brought up and discussed in a lame duck. And you can see based on where this happens. So if there's a clean sweep from the Republicans, very unlikely. If there's a clean sweep by the Democrats, could be that they'd push it through at that point. Although, if you think about the two extremes of a clean sweep on either side, the politics probably warrants dealing with it in the next year. If you have a divided government, then each side sort of makes the political calculus then that says, can I get something better that I want now with dealing with something in a lame duck or not? Still very, very low odds. The likelihood of this being dead is pretty, pretty high. But I just wanted to give you that closure because we've been talking about it for months.
Yeah, and there was a couple questions coming in saying, okay, what is the result here of that vote? The result
is that it procedurally is almost impossible for Senator Schumer, the leader of the Senate, to bring this vote back to up before the election. He technically can, but now he's on record with a 48-44 vote when it took 60 votes in order to bring it forward. I will tell you that you will see campaign ads on the basis of this vote. You will see people in contested senatorial states where there are, races that are very important to determine who's in the majority, and the issue of whether or not people will make it a campaign issue of whether or not you supported a child tax credit, even though that's just one part of the bill. That's what the whole vote was about. Mm-hmm. But the likelihood is this is dead.
Okay, let's move to another hot topic. It's in the news every day. Just what's going on with AI and what you're hearing here a lot down in DC is people feel like they didn't get on top of the social media regulation soon enough, and they're trying to make sure that doesn't happen here with AI.
Okay, AI is actually a topic among very few that is actually bipartisan. So there are people on both sides. You can see this is a Democratic senator that is leading the way here. We've been very, very active on this bill. It is a bill that sort of sets a framework and a process in motion to try to deal from a regulatory and a legislative perspective with AI. How are we going to regulate it? Setting out some activities that they would like businesses to do. The bill actually makes them mostly voluntary. One of the the two key components from the profession perspective is that it sets up an advisory group to make recommendations to one of the agencies of government to set a framework. One of the things that we pushed very hard for is that the construct of that advisory group would be clear, that someone from our profession, someone with assurance and attest knowledge, would be part of that advisory group. Because the last thing we want is a set of recommendations that are not workable in that particular environment. So that is in this bill. The second issue is that it actually is a predicate. It actually puts in place the notion of assurance on some of the compliance issues of AI as it moves forward. Again, it's not a mandate at this point. It's sort of think about it as a toe in the water as far as Congress getting involved in this process. There's no guarantee this will pass. It could get through the Senate. It is something that is very important of how it's written today to really sort of pave the way for the profession to provide a test on compliance, and more importantly, as it's being developed based on recommendations, that the profession's voice is in that process.
Well, thanks, Barry. I know the DC team is very active in all of this. So we're now going to move to the technical updates and bring Lisa Simpson up. Lisa, it's great to see you. We tried to get you up here to New York, but you're down in our Raleigh Durham studio today.
Yeah, I'm in the Durham studio. I've been meeting with some of our leaders from across the globe, talking about what our big plans are for 2025. So it's been an exciting week. I think we have a lot of good stuff in motion for our members to advance the profession. And it's fun. It's good to talk about. But I'm not going to talk about that today because we got some technical updates we'll go through really quickly. All right, so I'm already seeing a lot of questions about ERC claims processing, and I wanted to let you know that earlier this week, or actually it might have been last Friday, days are confusing, the IRS said they're going to give us an update pretty soon on what they'll be doing in terms of processing those low-risk payments that have been in the queue for quite some time. And they've also released a new list of red flags that they've found in their research of the claims that are already in their system. I wanted to call out this quote for you because I thought it was really interesting. And this is from Commissioner Werfel. As he's preparing for the next announcement to talk about compliance, to talk about those common errors, he's continuing to urge people with pending claims or previously approved payments to talk to their trusted tax professional rather than a promoter to see if they are in this red flag situation. Now, we went through a lot of details about the claims buckets that they were kind of prioritizing on the June 27th town hall. So I've given you a link that'll take you back to that technical update section. And if you didn't catch it, or if you've forgotten what those buckets are and what the numbers are, go ahead and look at that after we get off today's episode. So they said, here's an announcement about an announcement that we're going to be issuing soon. And so if we look at one of the parts of the update, it was around those red flags. And they'd already given us 7 back in June that they said were coming up as they looked at the million or so claims that they had evaluated. And so on the next slide, we've got those first 7. And I would say that a lot of those were fairly straightforward. I think the next 5, the one that we've marked as being new, are a little more nuanced. But one of those is, I know something that we talked about a couple of years ago when PPP loan forgiveness was our hot topic du jour. And that was whether or not you could use PPP loan forgiveness wages along at the same time as you were using them for ERC. And of course, the answer is no. But they are finding that a lot of the claims that were filed were doing that. And another biggie that I know we talked so much about and created so much angst was that number 10, reporting family member wages as qualified wages, a no-no for employee retention credits. So we've got a good list there. If you've got clients that come to you and say, maybe one of my claims are going to tip one of these red flags, then what? What are your options? And that's kind of the next part of the announcement. So the IRS has said that they're going to come out with another big update and that they are evaluating potentially opening the voluntary disclosure program window again. So we've got some details about that. And if you remember, that first voluntary program was open mid-December to mid-March, so very short window. But they got in 2,600 applications to withdraw their claims for about $1 billion. Now, they've already told us that any reopening of voluntary disclosure will not be as attractive an offer as the first one was. But if you don't want to wait around for that, or if you fall into a different category, then you've got some other options. And the first one is that withdrawal program that continues to be available to employers who, on second thought, are saying maybe this wasn't a proper claim. And they can use that if they have not received the refund or if they got it but haven't cashed the check. The next option is simply to amend the return to revise the amount of the claim as long as the statute's still open. I'm going to point you to a podcast through our Tax Section Odyssey team, and that's April Walker. She had a great conversation with Chris Whittick and Dan Choden, who've been key volunteers for us in this ERC space. It's a really interesting conversation about what the landscape is around ERC and what they're telling their clients. So good information for you. Really interesting 30-minute podcast. And I'm also seeing questions about, well, what's going on with those claims that have been filed after the moratorium that was put in place in September. Those are still on hold. The IRS has not said when they will begin processing those claims that were filed after the moratorium. We do expect that they'll start beginning payouts on previously filed claims that are in a low risk category. And that's what we're expecting to hear about this week. Also seeing questions about, should you still be filing ERC claims because of that Wyden-Smith provision that cut off ERC as of January 31? Well, as you just heard Barry talk about, the likelihood of that coming into law is low. But as we've talked about in previous segments, just because that particular law may not, or that particular bill may not pass, that date's out there, and that date represents a huge pay-for provision that could come into play in future proposed legislation. So what do? I think you have to talk to your clients about it and say, here's the pro, here's the con. Do you want to file? Do you feel good about filing? And are you okay with filing, knowing that it could be all for nothing? So that's one of the questions that we're getting. And then I think that's most of the questions on ERC. So stay tuned. We expect to have some news soon. And obviously we'll shoot out a note to you if we hear anything interesting about ERC. The next topic is some regulations that were released by the IRS recently on required minimum distribution regulations. I'm going to read y'all because this gets into the weeds. So just bear with me on this one. So we've got the Secure Act. And on the next slide, I'll talk about Secure 2.0. But for the Secure Act, we got final regulations, and they give us some resolution of uncertainty around 10-year rules and required minimum distributions. This was a key question that was raised back in February of 22 when the proposed regs came out, asking, are beneficiaries subject to the 10-year rule required to take RMDs during the 10-year rule? What? So the answer is yes, but only if the beneficiary subject to the 10-year rule inherits from an owner who dies on or after the required beginning date. Do you see why I'm reading this? Some good news that came out in this is that there are no penalties or makeup distributions, but for years 22 to 24, if the RMD wasn't taken for those folks. And that's been a huge advocacy point that we've pressured on for quite some time. We also got some clarity around what to do about undistributed RMDs in the year of the decedent's death. And it gave us some clarity around multiple types of situations if there are multiple IRAs and different beneficiaries, so it gets a little confusing there. But you'll see some of the other things that they talk about. And then one that I wanted to point out is that there are new rules for trusts that are requirement account beneficiaries. So they must meet the definition of a see-through trust, as well as if it's a conduit or accumulation trust. All of that's going to come into play in looking at those RMDs. We also got some proposed regulations on Secure Act 2.0. So next slide talks about what the proposed regulations give us. And the first one is a simple correction of a drafting error. I remember getting questioned about that RMD age and thinking, I don't know, maybe it's a math issue. So they've given us some correction on that. And then also some information around surviving spouse elections. All of this just shows the complexity that your clients are facing or your potential clients are facing when looking at these RMDs. And it gives us as CPAs that opportunity to differentiate ourselves, because the tax ramifications of these types of decisions can get pretty convoluted pretty fast. So don't worry, the PFP section is going to give us some resources to walk through some of these things. And I'm excited to announce that Dan Snyder with our PFP section is going to be joining us on September 12th, AICPA Town Hall, and we'll go into a deeper dive on all of this. So we'll be on the lookout. We'll have some podcasts and other things for you because I know that's going to be fairly complex. Then we have an announcement that the Hurricane Beryl that impacted a lot of our clients and practitioners in Texas is now it now qualifies for tax relief, and it extends the dates until February 3rd. My continuous reminder that the AICPA Benevolent Fund is here to help if you're an AICPA member and you've been impacted by a situation like this or an accident or a medical expense. Please do check out that AICPA Benevolent Fund. It's a resource that we encourage you to take advantage of if you're in one of these situations. You might see in your slides, if you're playing along, that I'm going to skip a couple of them because I wanted to have some time to talk with Erik and Barry about some other things. But so download the slides. You'll see a couple of other updates. Really quickly, I wanted to highlight that the IRS came out and announced some it's a quarterly update on their strategic operating plan. And they were happy to announce that their document upload tool has reached 1 million submissions. And this is all coming about, well, a lot of it's coming about because of the funding that was included in the Inflation Reduction Act. So they're reporting on some of the benefits of them having access to that funding. You'll also see that they've increased their online tools and digital services, and you'll see some of the benefits that you can get through using those online tools. I think one that jumps out at me is amended returns that can now be e-filed, getting all the tax information from that one source, and then viewing the status of an audit instead of having to call the IRS and wait on hold for quite some time. And then we'll end with our bookend of ERC. We got to talk about beneficial ownership information reporting. We had a couple of new FAQs that were released, and one is about details for disregarded entities. And for that, it's just what kind of number are you going to use when you file the report. So the FAQ says that you can use a taxpayer identification number, an EIN, a social security number, or an individual taxpayer ID. And then we got an FAQ around how can I get a tax ID number for a new company quickly so that the report can be filed within the required 90 days, because the filing is going to require the EIN, the SSN, or the ITIN. And we are happy to report that they've given us some guidance on that. And I think the takeaway is if you cannot get your number in time, make sure that you're documenting your efforts to it. And I want to give a shout out to our advocacy team who's been really trying to work with FinCEN so they understand some of the challenges we're facing. And I was not on the last town hall, but we have Melanie Lawrenson on, who's working so closely with FinCEN on BOI. She gave a great, really comprehensive review that talks about not just what FinCEN is thinking about, but also a couple of attorney general opinions that came out in 2 different states. So I'm really going to encourage you to watch that segment if you missed it. And as always, we've got our BOI Resource Center available to you. So we've got all of that good information for you.
And Lisa, we're now going to engage our town hall community with some BOI questions.
Yeah, and I think as we go into these, we're going to have a couple of quick polls for you. I think there are 3. Yeah. And I'd encourage you to respond to these because this is great intel that we can use in our conversations with FinCEN. So your input is really going to help us.
So Lisa, the first one should be live right now. What percentage of your clients do you believe are aware of the BOI reporting requirement? There's 5 choices. One is NA. If this is something you're not in a firm, you're not working with clients on, but we'd like to know what percentage you believe are aware of these reporting requirements. So we're now going to move to the second question. And this next question is, what percentage of your clients have asked you to provide BOI services? So Barry, I know this is something that you do talk to firms about, and you've been talking about on the road.
Yeah, they probably aren't asking, but we'll see the results. And but I continue to believe that this is a compliance element where it's mostly going to be in the CPA firm's knowledge base. Obviously, we want to fix the period of time that we can to file, which is going to be the next question. But I just don't think that you want some other service provider between you and your client, and that you really ought to take a look at that. And if you didn't listen to last 2 weeks ago's town hall, and Lisa referenced it, and there have been 2 states' decisions that basically say, clears up, this is not unauthorized practice of law. And we're working really hard to get this extension, to get legislation passed, to fix the timeframes, and also to make it clear that CPAs can do this work.
And the last question here is something that we'd like to leverage with our advocacy team. Make sure it's going up. I think there we go. It's live now. So this question here is related to the timeline that you think would be most reasonable. So starting in 2025, entities will have 30 days to file new or updated BOI reports. What type of reporting timeline would be most reasonable? And we've got the existing 30-day, a 90-day timeline, 120 days, reporting once per year.
This is obviously a big issue because, minor information changes could invoke the 30-day timeline under the current law. We are very active in saying to FinCEN, this is an unreasonable time frame, but we want to see what town hall participants think about which should be the answer there.
Okay, well, we'll look forward to sharing those results in the newsletter. So now we're going to move on to, I guess we've got some resources here. Lisa, we want to cover this latest J of A article.
I really wanted to call this out because it's got some great conversations with single owner firms. And I know a lot of them, so I'm excited that they've realized my dream, which is to be in the Journal of Accountancy. And then we've got some articles or some insights around how small firms are finding success with CAS, because I saw some questions coming through when you were talking to René earlier about really how does a small firm do this type of service. So check out the Journal of Accountancy. You've got some easy links to get there. And of course, we always have one of my favorites, which is the Professional Liability Spotlight article.
So Lisa, I think you didn't you post on this kite to be on the cover of the Journal of Accountancy?
I am terrified of heights, Barry, terrified of heights. So no, that is not me.
So just confirming that slides are back up here, and we've moved on from the poll. So now we're going to go into open forum. We've got a lot of questions, Barry.
Good.
So let's start off with a kind of a DC related one. Could you elaborate? Asking you, Barry, to elaborate on an article where it was the Supreme Court Devon's decision. Is this a big deal for tax pros?
Yeah, I mean, this all relates to the
Not Devon, sorry, decisions, Supreme Court decisions.
The Supreme Court. We talked about it. Yeah, it's the issue of the Chevron deference going away. I think it is a big issue in tax. I think many, not all, of tax preparers and professionals, like IRS interpretations that gives some black and white answers, or at least mostly black and white answers to that process. And I think you're going to see that slow down, maybe not even happen at the IRS. And I think that's going to be a problem in the tax area. There's other areas that it probably benefits the profession, but I think in the tax area, that's going to be a particularly difficult process. It does open some doors for some challenges for clients that may have some other sticky topics that are out there that they could go back and re-challenge them if they're just starting to have that as being an implication, even though a regulation may be out there for a long, long time. That there's another case that allows that to happen. But as I've said before, I think that the Chevron reversal will be very difficult in the tax area because we rely on, and Lisa talks about it, and Melanie and others, the great relationship we have with the IRS to try to get clarity that helps practitioners do the right thing in what, as I've described it, our voluntary tax system, and clarity supports that voluntary process.
Lisa, we've got a lot to sift through. Any question that you want to bring up?
Yeah, we lit up the boards. One of the questions that I'm seeing is, what about, this is around employer retention credits and the pile that is sitting at the IRS that has not been processed or released, and what can a client do? What can a small business do if they've been sitting waiting for this claim and they feel like it was a very proper claim? What do they do? So I think if you listen to that podcast that I referred to earlier, if you've contacted your congressional representation and then you've contacted the National Taxpayer Advocate, that are your two next steps. But again, we are hoping that those legitimate claims filed prior to September will begin being processed very quickly, and then we'll wait to get the update on those filed after the moratorium. But again, we do understand that there are a lot of businesses that are waiting on these legitimate ERC filings.
Thanks, Lisa. Barry, a question about the big efforts around talent and status with the National Pipeline Advisory Group's report.
Yeah, that report just went final in the last 48 hours or so. And so that report is out there on the website, et cetera. And just for a reminder, it talks about 6 different sort of major themes, many of which people can do individually. They're not profession-wide, if you will. Everybody in the profession can do it, but individuals can make contribution to that, like telling different stories and things of that nature about what life is like with the profession, the good, with, maybe not just always the bad about hours and things of that nature. But one of the key components is the education requirements, what we expect to happen. So what happens now is the report is out with these recommendations. There'll be a whole series of implementation type of activities. Who's responsible? They're not all responsible for us, as I just mentioned. It's some might be at the states, some might be in firms, et cetera. But what we do expect to happen is sometimes during August, we expect our board to approve, and the National Association of State Boards of Accountancy board to approve an amendment to which would be open for comment for 90 days, amendment to what's called the Uniform Accountancy Act, which is the model language of, what is sort of suggested for state laws that govern the profession. And that amendment will focus on more ways, or more specifically, a very key way for students to meet the 150-hour requirement other than just taking education courses. And that's going to be exposed, I think, it's very important. It's exposed both by the state board representative, NASBA, and us. And then, like any other exposure, the comments will be evaluated, and based on those comments, some finalization will occur before the end of the year.
Well, thanks, Barry. A very, very important initiative. So that brings us to the end of another Power Hour here. Barry, we had close to 10,000 with us today. So thank you for tuning in. We're competing with the Olympics and other things as well as work, but we really appreciate this audience.
And summertime too.
And summertime, and we want people to be getting some well-deserved time off. We actually now, to support flexibility with the town halls and also to enable you to get CPE, we're going to do a town hall rebroadcast beginning August 5th. So we'll put this out in the newsletter, information about it. But if you miss the live town hall, a few days later, we'll do a rebroadcast with live Q&A. So it will still qualify you for CPE. So we're always trying to innovate here on the town hall. And our next live session is going to be Thursday, August 29th. But we are going to do an on-demand video town hall on August 15th, which then you can just watch at your leisure. Correct, Lisa?
That's correct. We're looking forward to it.
So, and here's the remainder of the 2024 town hall calendar. And here on August 29th, Lisa and I will be back with you. We'll have a discussion with our professional liability team from Aon, and Mark Peterson will be joining us from the advocacy section. So Barry, great to be with you back-to-back weeks here in New York. I'll let you sign off to the town hall community.
As always, we appreciate everyone's attendance, 10,000 or so every other week, and really are committed. Our team does a great job. I just want to compliment them on doing all the work to bring you this timely information and really hopefully make everyone's sort of information set even better.
Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.